G'day folks, welcome back to another update for the German DAX and the Japanese Nikkei. Now, they both continue to decline since our last update. And before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of what the market is saying about both the German DAX and the Japanese Nikkei, in terms of the DAX as of today, February 28, the recent coalition government formation between the CDU and SPD is anticipated to enhance economic policy making, leading to increased infrastructure and defence spending. The DAX has outperformed the S&P 500, gaining 13% year-to-date, supported by the European Central Bank's continued interest rate cut. However, potential global trade conflicts remain a concern. For the Nikkei, it's projected to rise by 4.6% by the end of June 2025, reaching 40,000 points, driven by an improved corporate outlook as US tariff uncertainties are expected to resolve. Despite recent gains, investor concerns persist over US tariff threats and potential changes in the Bank of Japan's interest rate policy. So first looking at the German DAX, we look at the long-term trends, the monthly, the weekly and the daily. And for those new to the channel, we've got these moving averages on both the CCI and the price, and they're available in the description below for that video if you want to learn how to draw that on your charts. So first on the monthly, you can see there the German DAX has been very strong bullish move since around about January 2023, with the exception of this little dip when the CCI broke into that moving average range, and that was between September 23 to about October 23. But since then, it's been bullish on both the CCI and the price moving averages. There's no divergence on the monthly. On the weekly, however, again, it's been fluctuating above and below that moving average range on the CCI since around April 2024. And that's currently showing a bearish divergence. So back here, for example, we did have a couple of divergence and they both played out. And the more recent one here with that little dip, that broke down, hit our minimum target range. And that target range, for those new to the channel, let me draw this one here and you can get an idea of how it works. But basically, we draw a trend from that peak to that peak there on the CCI, and that's slightly lower, or at the very most, it's a double top, but it's slightly lower than that point there versus the same period between that range there. Higher highs on the price versus lower highs on the CCI. And what we do, assuming it starts pulling back, it's probably a bit too early to call it yet, but I'd like to see this CCI break into that moving average range to start measuring it. But if I was going to draw a Fibonacci retracement, assuming it pulls back from where it is at the moment, we take it back to that low, the significant low before the divergence started, and we expect a pullback at the minimum between that Fibonacci range, that 38% Fibonacci as a minimum. So that's where we look at potentially, and you can see back here as well, we had a couple of pullbacks. And let me just demonstrate on a couple of these other ones. So back here, for example, this one, between that one there, we would have drawn a Fibonacci between that high and go back to that low there. You can see there that 38% level was, it bounced right out of that. So you take it back to the significant low before that divergence started, which was that point there, and that's at minimum range. And more than 90% of the time it hits this minimum range. Sometimes it breaks right through, other times it just does this and rises from there. And like I said, more than 90% of the time it hits this range, but it occasionally fails, but very, very few times it fails, in my experience at least. So that's where we are on the weekly. Now, so we've got a bearish divergence potentially on the weekly. On the daily, we had another bearish divergence here, double top on the CCI versus higher highs on the price. And again, if we drew a Fibonacci back to that low there, you can see there it broke right in that range and it went just below that 38% level. So it depends where you draw the Fibonacci. I like to take it back to the previous low, significant low, and that would have been another retrace at that point there. And it actually fluctuated in that range for a number of days actually. If I take it back to there, that's a 38% level. So that's on the daily, but notice also on the daily we've got a bearish outlook on the CCI. So I wouldn't be going long in terms of buying the German DAX at this point. I'd be waiting for this to break to the upside, and preferably I like to see the price break above that resistance at 22,881. But at the moment, bearish outlook so far on the daily. And if we go to the 1 hour chart, we only take trades in the direction of the longer term trend. In this case, we go short only. So during this period, you would have avoided going long at that point. and you would have started taking some short trades. And more recent one, let me just draw some of these here. So working backwards, you can see you would have gone short when the CCI broke below that moving average range, and also when the price did. So you would have gone at the close of that candle, and you'd still be in the trade at the moment. So it's currently returning 0.4% gains over 7 hours of trade. Previous to that, you would have gone short there and closed it out when that broke in here. That would have been a small loss actually. So you can actually take your profits early, and as soon as you start seeing the CCI rising, you can actually take the profits. Alternatively, what you can also do, let me change this to a 15-minute. So during this period, for example, when you start seeing that decline from that point, you can actually, as soon as you start seeing that rise from there, for example, you could have closed it out there on the smaller time frame. So you can actually drill down to the smaller time frame and maximize your profits if you want to do that. But that also risks the price continuing on a downtrend. So it depends what time frame you're trading. It's always an advantage to sometimes drill into the lower time frames. So we've got the Japanese Nikkei, again looking at the long-term trends. We've got the monthly, still bullish above the moving averages, but notice we've got this bearish divergence with the CCI breaking below, so we're going to expect this to break lower still. There's no sign yet of a pullback, but notice it's actually hit this minimum target range based here. So if it's to expand that for a minute, you can see there, reach that peak versus that peak on the CCI, and we would have drawn a Fibonacci. That was back to, let's go back to this significant low there. You could have taken it to that level, but that's already pretty much hit it. But taking it back to that low there, you can see there it hit that 23-38% with those wicks, and it's been fluctuating around that 23% since. But notice the CCI is still dropping, so again, bearish outlook on the monthly. On the weekly, this one's giving us similar sort of viewpoints. Another bearish divergence here more recently, and that's broken down. If I was to draw a Fibonacci on that as well, between that range, I haven't drawn a target area, but you can see there, it's been now in that range there for some time. Been fluctuating in that 23-38% range in that smaller divergence, and it's currently broken through that range and still dropping. Notice the CCI is also very bearish at the moment, so still more downside to go on the weekly. And on the daily, after hitting this resistance up here at 46.20, it's actually broken down since our last update and hit this minor support at 37.265. It's actually broken through that, and at the moment it's still bearish on the CCI, so bearish outlook only, no long trades to be taken on the Japanese Nikkei. And if we did go to the intraday charts, again going in the direction of the daily, taking short trades only. More recently, you would have gone short on that candle, and you would still be in the trade today at the close of that one there. So you're currently up 2.1% in 12 hours of trade if you're trading that. Avoid going long. Some of these are false breaks, you can see there, and I would have put a stop loss on those moving averages. So a couple of false breaks there, and it does fluctuate this way. But again, you would have avoided going short during these periods. So if you you would have probably gone short here because it's still in a downtrend on the daily. So it depends on the angle of the CCI moving averages as well. You can see there it's pretty much trending slightly upwards versus the trending down on the price. Normally you want to see the CCI trending in the same pattern as the price. In this case, you can see there it's actually rising compared to the price falling. So again, you'd probably be cautious about taking some of those trades. That's what you normally want to see, this sort of action, the CCI moving in line with the price action. And that's where you can more safely take some short trades. To support the channel, hit that like and subscribe button. And for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.